I'd like to welcome in Marc LoPresti, the Chief Market Strategist at Market Rebellion, and of course, Caroline Woods, my co-host today. So Marc, thank you so much for being here with us. Really, to start things off, I mean, there's so much to discuss in the tech space. I mean, walk us through some things you're liking as of late, maybe things that are falling out of favor.
Well, listen, Jenny, first, thanks for having me. It's great to do the show with you and your co-host. This is really a confluence of, I think, the market coming to the realization that this massive proliferation of data centers that's occasioned by the explosion of AI and cloud computing is going to be causing some pretty significant problems in terms of our energy availability, whether it's what we pay for electricity, the availability of electricity. So we're seeing stocks that are like Marvell that have the ability to help make those data centers more efficient, to squeeze more juice from the lemon, if you will, by having faster and more efficient equipment and software starting to become very, very favored by traders and investors as this energy demand story comes more into focus. And look, their numbers were great, right? They handily beat the estimates. Earnings per share 43 versus 41. The revenue 1.5 versus 1.46. 7% year-over-year growth. That's nice. That's nothing to sneeze at. But look at their data center segment growth. It was almost 100% year-over-year, Jenny. 100%. And what's that represent in terms of their total revenue picture these days? It's 73% of Marvell's business. And that is only going to grow. It's not going to change, and as they make even more, they make equipment that makes data centers even more efficient, use less energy, help solve that looming energy crisis that AI is creating.
Hey, Marc, and you mentioned the 98% year-over-year growth, 25% quarter-over-quarter growth, which is pretty impressive on a sequential basis. In terms of the other 30% of the business, though, if you take a look at the year-over-year comps, I mean, the steep losses for enterprise networking, automotive, consumer, carrier infrastructure. At what point does that need to see a turnaround for, to maybe justify some of these Marvell gains? Or is this just going to be a data center story? This is a stock that can continue to rise.
Yeah, I mean, look, I think it is going to continue to be a data center story. And again, not just a data center story, but a data center energy efficiency story, right? And as a result of that, I think we can expect traders and investors to continue to shrug off those more sluggish parts of the business, which, as you accurately point out, don't look so great, right? But they're also, as you pointed out there, they're in some sectors where spending on tech like this has not necessarily kept pace with other perhaps higher tech sectors of the market. I mean, the automotive industry is certainly not spending on this type of equipment to the same degree that cloud computing and data centers and things around AI and technology are. So that doesn't necessarily surprise me. And as long as their forward guidance continues to be as rosy as it is, the street's going to continue to bid this one up.
And Marc, I'm so glad you mentioned, all of the hype around data centers, because frankly, that's been NVIDIA's story. I mean, that's so much of what's carried that strength this year. And so I'm curious because as of late, we've seen the emergent, the winners, the losers. I mean, it's been so clear. Names like Intel, for example, which is an unfortunate example to give, but we've seen these names consistently outperform while the underperformers continue to lag. And so is this just going to be more of like a stock picker's market in tech? Or are we going to see, hopefully, the rising tide lift all boats? And I guess it's been that way somewhat this year, but semis really feel like they've diverged in the last couple of months.
Yeah, well, and I mean, I don't know that that's necessarily a market dynamic versus a sector dynamic. There are, as you accurately pointed out, emerging fairly clear winners and losers, leaders and laggards of the pack when it comes to the AI and the cloud computing revolution. And I think that's less about the market being a stock picker's market and the sector being somewhat more selective. And look, at any point in time when you have a sector that's been bid up as much as the chip sector has, NVIDIA, of course, being at the head of that pack, you got to expect investors to take a little profit, to start getting selective. But we're going to see on the names that are the winners, we're going to see higher highs and higher lows. We're going to see that continue into 2025.
Mark, is that what you think that this has been really kind of since the summer, just kind of some normal profit taking for big tech? Because we were talking about it at the top of the show, that tech has very much been back in favor for the first few days of December. Do you expect that to continue to be the case in 2025, or can we see a broadening that includes everything?
Yeah, so the short version is yes and yes, right? It's risk on. I mean, let's be honest. We see how the market's performed since the election results. The market is anticipating continued rate cuts, continued inflation under control, and perhaps more importantly, very, very favorable waters, very warm waters, if you'll accept the analogy, for business. I mean, I think it was Wharton that said that Trump is expected to be the most, particularly in this term, the most pro-business, pro-stock market president that the country has ever seen. I think we're anticipating, light or lighter, certainly by comparative nature, regulatory environment, lower cost of capital, more favorable regulation in terms of the competitive stature of American business versus the rest of the world. So, yeah, I mean, that's causing an overall, as I said, risk-on environment. There's been a lot of cash that's been sitting on the sidelines, certainly heading into the summer, waiting, and not surprisingly, in anticipation of the outcome of the election, particularly given what the outlook would be from two candidates that could not be more far afield from each other when it comes to their overall economic and business policies. And now, yeah, we're expecting Santa's coming, as I've said, the rally's coming, and we expect the party to continue into 25. Don't expect no profit taking, though, folks, right? We tell people take profit. Nobody ever went broke taking profit. So don't be shy about taking money off the table, because there will be dips along the way. There will be profit taking. There will be sell-offs. But again, higher highs and higher lows going into 2025.
Higher highs and higher lows. That sounds pretty nice. I will say, I think I'm an eternal optimist in these markets. But as far as valuations, before we let you go, I'm curious your thoughts on, say, some of the behemoths, like the Apples, the Nvidias, that valuations now, I mean, are arguably some of the most expensive they've ever been. Is there any risk there, or is that just another space in the market that could continue to see higher highs, frankly?
Well, it's hard to throw Nvidia and Apple into the same basket, if you excuse the terrible pun. I mean, Apple certainly had some struggles this year in terms of a lackluster response to the latest iPhone, concerns around competition in the China market, creeping market share, or taking local incumbents taking market share away from Apple in terms of the Chinese market. Their overall reliance on the Chinese market that's not doing very well right now from an overall macroeconomic perspective, as we very well know. So I'm not as excited about Apple as they may have been in the past. We do remain excited about NVIDIA. And yeah, are they expensive? They're damn expensive. NVIDIA is definitely expensive. The valuation is definitely getting into the nosebleed territory. And that's part of why you will see investors taking profit on pops. So when you see those pops happen, don't sit on the sidelines, take profit, and be happy that you did.
Okay, take part in profit taking. I like that. That's some great advice to walk away with. Appreciate it so much. And all of the tech breakdown, Marc LoPresti, Market Rebellion coach, of course. Thank you so much for joining the show.